This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome to a brand new episode of the Smart Property Investment Show. It's Grace Ormsby here. Here at Momentum Media, we cannot get enough of data. We're always talking about the latest in reports, insights, analytics, everything that's going on in the real estate sector, you know, what that means for property investors, for first-time buyers. Now we're looking at a pretty interesting political landscape, especially for the next 6 weeks with the federal budget, with the federal election now being announced. So it's an absolute pleasure to be bringing someone onto the show that deals with data every day. I know she was doing some pretty serious data mining just before jumping on this episode. Dr. Diaswati Mariasmo, welcome to the show. How are you?
Hello, Grace. Thank you so much for having me. How are you going?
I'm good. It's so nice to have a sunny day in Sydney. Actually, we haven't seen any of those for such a long time. And the fact that out of my window at the moment is quite bright has lifted me this week. Obviously, Easter's coming up. You know, we've got a few public holidays to look forward to, a few short weeks at work. There's a lot to be excited for, I think.
Oh, definitely. I'm in Brisbane and it has been raining for the past 2-3 days. And it's one of those like annoying rain that it's not like real rain, if that makes sense, but it's just there. And I am hosting an Easter egg hunt for about 15 kids on Friday. So hopefully the weather stays and it doesn't become, you know, a wet Easter egg hunt, although I suppose we can still do that. But definitely. It's definitely some exciting times.
Definitely. And Diaswati, for everyone that doesn't know, you are the chief economist over at PRD, the real estate network. Pretty big data that you must be dealing with day in, day out. Can you just talk us through a little bit about, you know, what you're actually working with in your role day to day?
My day to day, oh my goodness, it's very varied. And the reason why I say it's very varied is because, you know, we're not just dealing with PRD data, we're dealing with literally every single sale, every single rental that's happening across the country. So prior to jumping on this podcast, I was actually working on some data for Tumbarumba and Tumut up in New South Wales. And about half an hour before that, I was data mining in the realm of property management data for Maryborough and Bundaberg and Hervey Bay. And so, you know, even like in the space of like within an hour, my landscape changes from data mining something in Queensland to New South Wales to Victoria to Tasmania, all across the country. You know, it's very, very varied indeed. And we're so blessed that we invest a lot in data. We invest, you know, a lot when it comes to making sure we've got the right subscriptions, the right data sets, the right analytic tools, the right software. So we're very blessed in that we can get the data for everyone in the market, not just PRD, but everyone in the market, and look at it as granular as suburb per suburb across the country, whether it's sales, whether it's rental, whether it's incoming projects. We've got it all on a suburb by suburb level. And so because of that, like the day is just so varied on where I'm at, even though I'm locally based in Brisbane, but, you know, data-wise, I could be anywhere across the country.
That's such a good way to put it, Diaswati. And I want to pick up on a particular piece of research that you guys have done recently, and that is the top 10 regional affordable areas 2022. You brought out this massive report. It must have taken a fair bit of time to sort of put together, but it is really, really interesting. You've looked through some pretty interesting indicators as to what makes a place affordable. How do you actually come up with, you know, and we're going to get to some of those suburbs and those local government areas in a little while. But before we do, let's take that step back, because I think there's probably a lot of people listening going, what constitutes an affordable area in this day and age when we've seen prices go up so much across Sydney and Melbourne, across Australia, basically? What do you look at when you're looking at that kind of data to go, yeah, this is affordable?
Well, first of all, you are absolutely correct about the mammoth size in data mining, because with this particular report, we basically, well, first of all, we concentrated in the eastern seaboard, which is Queensland, New South Wales, Victoria, and Tasmania. mainly because in Queensland, New South Wales and Victoria, that's where we have seen, the most stress when it comes to housing affordability. So in terms of average home loans that Australians are paying or that they've committed to in these regions, so Queensland, New South Wales, Victoria, it grew by about 50-60% odd in the past 5 years, which is just crazy, right? And so that's where we're seeing the most issues or stresses when it comes to housing affordability. And so because of that, we focused on these regions. And yes, it was mammoth data mining, Grace, because we looked at every single local council. We didn't leave anybody out. I think, we did like hundreds of council for New South Wales and then for Queensland, almost more than 70, 80 for Victoria. Our smallest was Tasmania, which is understandable because of its size. But yeah, we basically looked at every single local government area. No one got left behind. It wasn't a case of, cherry picking some local government areas that everyone have heard of or everyone know about or is in the media a lot. It really was giving everybody a fair go, everybody the same chance. And it is based on a methodology that we've created, and it is based on certain indicators because, if we are going to recommend a particular place, we don't want it to be what we call to be lemon areas. We don't want it to be some place that people sort of go, why? I don't understand.
I mean, it may be cheap, but what does it offer me as a person to be living there, really?
Exactly. And when we say affordable, we don't mean that we identify the cheapest local government areas or the cheapest local councils. So our affordability, the way that we measure affordability is that we base it on the state average home loan. So each state has its own home loan sort of like parameter. And this is based on data that we get from the Housing Affordability Report from the REIA, which we all know is a very trusted report. The state average home loan basically tells you this is the amount that the banks are on average comfortable in lending to people in that particular state. So the banks are, for example, for the December quarter 2021, the average state home loan or the average home loan for Queensland was $501,000. So that means that the banks are very comfortable in lending on average this much money without people in Queensland, running into mortgage stress. So that's kind of like the definition there. So what we do is that is the state average home loan. We add on 20% on top of that. So because, we assume that people have 20% deposit, which is kind of like your norm when you're wanting to go for a home loan. So so it's a state average loan plus 20%. So we calculate a price based on that. So you just, simply do a calculation. And we wanted to ensure that any areas that we recommend is under that threshold. So that's our first indicator of affordability. So it's not the cheapest, but it is that state average home loan, which is the amount that the banks are comfortable in lending to people in that state, plus 20% assumed deposit. And we want to make sure that we go under that. In terms of, so what's in it for me, other than, the fact that it's probably, a more affordable than the capital city, which a lot of these places definitely are. We also made sure that there is positive price growth over the past 12 months, and that's between 2020 and 2021. So we made sure that there's positive price growth so that anyone who is going or wanting to invest or buy in the areas know that they have that confidence of that capital growth that they would be able to get. So they've seen that happen. If you are an investor, which a lot of people are starting to choose regional areas as opposed to capital city areas to invest in, we make sure that that particular LGA or local government council have a higher rental yield than the relevant capital city. So for Queensland, we made sure that the local government area has a higher rental yield than Brisbane, and they also have a lower vacancy rate than Brisbane.
Mhm.
And the same with New South Wales, so it's a higher rental yield than compared to Sydney and a lower vacancy rate compared to Sydney. Because then that means, combining that affordable and the investment side of it, then that means you can go in or you're able to buy something for a lower price than the capital city, but you are getting a higher rental yield and also a lower vacancy rate, which is, kind of like the investor dream, right? You want to be able to
Yeah.
go in at a lower price, get a higher return. And we all know that when it comes to lower vacancy rates, that means that the chances of your property being rented is quicker, so you have a much better income cash flow.
Mhm.
The next indicator is unemployment rate. This is actually underpins everything that in terms of why we've chosen these certain areas. We've made sure that the LGA, the local government areas that we identify have either a lower or an on par unemployment rate with the state average. So all of the LGAs that we are putting forward for Queensland, for example, have a lower unemployment rate than Queensland itself. So the Queensland average. And the reason that we do that is because whenever we say a place is affordable, go there, people go, well, is there a job? Am I going to be able to go there and live? And that's why unemployment rate is so important to us, because we want to promote, or we want to identify places where, yes, there are jobs. Currently, the unemployment rate is lower than the state average, and so the chances of getting a job is higher. And the last one, which is, and this is, I think, a really important key indicator, is project development. So like I said, we were very blessed to have access to being able to identify all of the projects, whether it's industrial, whether it's commercial, pure residential, mixed use, or infrastructure in every single suburb across Australia. So we've made sure that the areas that, we look at have a higher amount of project development that's about to happen in the area, that's planned for the area in 2022. We've made sure that it has a high concentration of commercial and infrastructure projects, because we all know that it's commercial and infrastructure projects that really lift up the area, in terms of economic growth, in terms of job potential, all of that good stuff that we want, right? So all in all, like these key indicators, I think it really shapes who we put forward, because not only are we making sure that the price is affordable compared to the capital city, there's jobs there because unemployment rate is low, there's currently capital growth, investors can benefit because of the higher rental yield, lower vacancy rate, and we all have confidence in the area because of the project development, the level of commercial and infrastructure projects that's about to happen in the next year or so.
I think something that I bang on about a lot, dear Swati, talking about real estate all day, every day now, is sustainability and just how important it is for growth, the growth that we've been seeing over the last couple of years, especially, to be able to sort of sustain the people that choose to buy and sell in those spots for a longer period than just this crazy 18 months, 24 months that we've seen. And from my perspective, all of those indicators that you have covered together, they do really, underpin that idea of sustainability moving forward.
That's exactly the reason why we do it this way, because you see a lot of indicators where, it's based on the number of sales or based on the price growth. And that's the only that's the only indicator that's being used. But like you said, we are currently in this crazy period that no one has seen and no one expected, that we don't. And this is something that we've always done with all of our reports, the projects and the unemployment rate. It's so important because it could be a fluke that a particular suburb or a particular council have recorded like double-digit growth for this year, but can they do that again, or is there going to be more growth coming? And that's the part where the project development is so key into tying all of the methodology together, because we want to recommend, or we want to identify places where people can go, well, it's not just a one-hit wonder. It's not just the one-hit wonder where it's gone absolutely bananas in the past 12 months, but then there's nothing to sustain it. There's nothing else that's coming into the area that's going to keep on that capital growth going.
We're going to keep this conversation going just after the break. We'll be back with more from Dr. Diaswati Mardiasmo.
Creating wealth through property investing starts with getting the right finance in place. At Finney Mortgages, our brokers specialise in investment loans. We know the ropes to get even the most complex deals approved fast. With access to over 50 lenders, we have the know-how and connections to get better rates, improve cash flow, and release equity fast. So, if you're looking for a mortgage broker that gets property investment, book in a call with the Finney broker now. Head to finny.com.au, that's FINNI.com.au today.
Welcome back to this very special episode. We're chatting with Dr. Diaswati Mardiasmo, Chief Economist over at PRD, coming to us from Brisbane. Technology is just amazing these days, what we can do, isn't it, Diaswati?
I know, right? I think because of technology, I have spoken to so many people all over Australia, all over the world, connecting with people then in ways that I've never connected before. And I think it's also forcing all of us to be more technology savvy as well. I'm from Indonesia and I have family in Indonesia. And unfortunately, due to COVID, I haven't been able to go home for the past couple of years. And so it's really forced, connectivity, technology company to up their game, and also us as society also to be more tech savvy, because unfortunately for my grandma, unless she knows how to do Zoom or unless she knows how to do at least WhatsApp video call, she might not see my face for 2 years.
Yeah, well, hopefully you can get back there pretty soon now. What's it looking like at the moment?
It's looking pretty good. There are still some quarantine rules and vaccination rules and things like that. Indonesia is a very densely populated country. They have about 10 times the population that we do. And so that's always a factor, especially with, the latest strands. And I think there's a new one coming out called Deltacron or something.
Oh, no.
I think it's like a combination between Delta or Omicron. I think it's been identified in New South Wales, or that was the latest that I heard about it. But, apparently it's less impacting, but it can spread so much more easier. And of course, in such a densely populated country, the chances of it just basically, they have 10 times more the people that we do. So it's 10 times more that you could potentially get infected. So I am waiting for it to die down a little bit. Indonesia is going into the Ramadan and Eid sort of like period where it's kind of like Christmas. And so everyone's traveling, everyone's congregating, everything is more sort of like in that public group sort of type thing. And so I'm waiting for that to die down a little bit before I make my way over, just to try and minimize the risk.
Lower the risk. Yeah, fair enough. Well, hopefully you get back over there soon. But question on that technology and side of things, how has that actually impacted you and the work that you do with data? Do you have access to a lot more data points now than you did previously, or have you found different ways to be looking at the data?
Yes. Oh my goodness. The amount of data subscriptions and data portals that has opened up, and the ability to, actually do access points with data. Because beforehand, we would have to, for example, we've just invested into Haver Analytics, which is an amazing data portal where we can get so many different types of demographical housing data, not just in Australia, but also in all of the G10 countries, which meant that one of the pieces that we did earlier this year is whether or not Australia is actually still affordable in comparison to every country in the G10. And we were able to create a graph, kind of like basketing it into a particular index, because, we're all on different currencies, to find out where we sit and, the patterns of 10 different countries in one graph. And it took us about 5 or 10 minutes to create that, because we're able to invest into that data portal. But at the same time, if we were back pre-COVID, there might have been issues with, training in terms of actually being up to speed with the data, accessing the portals, having tools. Now there's so many, they've developed so many like online tools, online videos, online tutorials, training via Zoom, training via the web, that it just makes it so much easier, because they're not Australian based. They're actually based in New York and Japan. And so, now we're actually able to tap into all of that amazing data and have local training, even though we're in 3 different countries. So yeah, it's really quite amazing.
I think that accessibility point is really worth hitting home, dear Swati. I feel like, for any agents or investors or first-time buyers out there listening to something like this, the landscape has changed so much in that 2-year period. It is that much easier to now be making really, really informed decisions, whether you're using that to market properties to potential buyers, or whether you're using that to sell your own property or entice renters away from the capital cities, which we have seen happen. But accessibility is huge at the moment, and it's only going to get more that way, I think. Is that your perspective as well?
Definitely. I don't know if you've noticed this, but have you seen the amount of like properties either being rented or listed for sale, whether it's normal sale or auction, on Facebook and Instagram and WhatsApp? And it's just opened up so much. Like being someone in PRD and being a chief economist, whenever someone is looking for something, whether it's a property investment or a renter, they come to me and said, oh, would you know anything in this particular areas? And normally we would say, oh, go to realestate.com.au, right?
Yeah.
Because that's, our domain, because that's like the 2 main portals that you would search for, etc. Nowadays, my answer have changed. My answer is now going, okay, so what area are you looking at? And they give me a suburb and I go, okay, go on Facebook and put in on your search bar your suburb, swap, sell, buy, rent. Click the search button thing, and I guarantee you there'll be about 3 or 4 groups that will pop up for your area, whether it's suburb, whether it's postcode, or just sort of like generic, sort of like Bayside or something along those lines. So many properties are being listed there. So many people who are breaking their rent or like their leases, for example, are listing their properties there and calling out for friends to rent or share house or what have you. That the landscape have now changed. And more and more, and I definitely see more and more people using social media to be able to promote their products, to be able to promote if they need to break their lease, if they need to find a renter, if they're looking for an area in which they want to invest in that they might not know about, but have heard on the media or have heard through a friend of a friend of a friend of a friend, and they just want a bit more information about it. My go-to, to be honest, Grace, is actually my mother's group on Facebook. It's like the thesaurus dictionary for everything. We discuss, like, everybody posts questions on what is the best baby formula, to the best playground, to if anyone knows a property conveyancer, if anyone knows a real estate agent that works in this particular area, or a property management in this other particular area. It's a mum's Facebook group across Australia, but it just holds so much wealth, and literally people will put on like all of their recommendations and all of their experiences and contact details and things like that. And it just, it's mind-blowing now.
And there's so much trust associated with that, isn't there? Compared to just seeing, an ad somewhere.
Yeah, definitely. Because a lot of the times you might have seen that person post a few times or give, other recommendations about other things and it has worked out, or you might have talked to that person in real life, or, have talked to them or made connection with them or in some way or somehow. And you just look at it and you just go, yep, I can trust that person, especially when they then tell about their experience too. So they might say, oh, I've used this property conveyancer because I've done 4 deals with them and blah, 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 blah. It's that sort of that sort of trust.
And speaking of trust, I'm bringing it back to the report and top 10 regional affordable areas in 2022, which is what we primarily are here to talk about, even though everything you're saying, dear Swati, is just incredible because it's so true and it makes so much sense to me. And I love that even, as much data and, high brain powered activity that you must be doing day in, day out, it's still like, well, I take my recommendations from what I see on social media. That's the way the world's going, isn't it?
It definitely is, because there's just some things that are on a day-to-day level that you put it this way. I think Facebook has somehow become the new Google, and so is social media. People ask things on Instagram. People are so much more open when it comes to sharing now. And even though, yes, I deal with high-level data and, I'm creating reports and things like that, there are other areas within my life and I trust everyone else who's listening, your areas within your life as well, where you're not the expert and you know nothing about. For me, it's mostly gardening. Like, don't trust me with a plant, but, nothing about it. And so you go to your social media to ask for your friends and family for help and even strangers sometimes. But you have this sort of for me, I go back to my mom's group because I sort of go, okay, cool. I can sort of trust that because we're talking about, what we're going to do in terms of even builders, renovations, all of these sort of things. And they have had the experience with it or, it is very interesting.
It's all real life experiences, isn't it? And I think this report does highlight some of that, just looking through that list: Whitsunday local government area, the Mackay local government area, Toowoomba, Upper Hunter, Wagga Wagga, Griffith City, Northern Grampians, Wodonga City, and Greater Bendigo, and then rounding it out as the Central Highlands. I feel like, even just naming that list, they're communities, aren't they? You wouldn't say that they're, just random locations on a map. They have all got, groups of people in them that are really community focused, want to build up their communities. And I feel like you've probably talked with people across Australia that do form part of those communities.
I think the definition of regional is something that has really changed. Regional is more a demographic mapping sort of term, it's a regional area. It's not in the capital city. It's not in the central business district. It's not in metro. So it has changed now. It doesn't necessarily then determine what you see in those areas or what you experience or the community that you experience in those areas. I mean, if we look at Whitsundays, we look at Mackay, Toowoomba, Bendigo, Wagga, they're not places that you haven't heard of before. They're not places that is so strange to you that it's, and forgive me for saying this, that they're outside in the whoop whoop somewhere.
No. They're all thriving regional communities, aren't they?
Exactly. So that's why regional to me, it really has changed. What does regional actually mean? To me, it's more a mapping definition, a more geographical definition, because in these locations, and I clearly completely remember this, I was in Toowoomba last year for the flower festival, and I took my 5-year-old Ariella with me. And then, after she's had enough of looking at the flowers and sniffing everything and, trying to pick every flower that she sees.
What 5-year-olds do.
Exactly what 5-year-olds do. We went into a cafe, and I was in this cafe and I was looking around and I'm thinking, I feel like I'm in Melbourne. I feel like I seriously feel like I'm in a cafe in Melbourne. It has this beautiful lighting, decorations, lots of leather, but lots of light in terms of all the decor, like the green decor around it. The menu was amazing. They have smashed avocado.
And probably a few different types of milk as well.
Yes. Do you know what I mean? So like the cafe menu was amazing. It was literally the same type of cafe menu that I would see here in Brisbane or in Melbourne or in Sydney. And, the price was actually friendlier on the budget. The produce was amazing. The decor made me feel like I was like in downtown Melbourne with a few touches here and there that was very flower spring festivally because that was what we were there for. But do you know what I mean? It doesn't feel like I'm somewhere that is, and I'm using air quotes here, regional, if that makes sense. I feel like I'm somewhere that I would just expect anywhere else, that I was able to get the same type of service, the same type of foods. Ariella had her, waffles with ice cream and milkshake. And you know what I mean? And I walk around and I'm driving around Toowoomba and I just see everyone doing business, everyone being at work, everyone enjoying their weekends. And it doesn't feel regional, if that makes sense.
For sure. We're going to take another break there, but we'll be back with more from Dr. Diaswati Mariasmo, because I want to unpack more about, that shift to regional living and whatever regional means. But I think we're going to see a bit more of that, especially with an election in the works. So see you on the other side of this break. Welcome back to this very special episode. We are chatting with Dr. Diaswati Mariasmo, the Chief Economist over at PRD. Diaswati, before the break, you were talking about your own experience being in Toowoomba in a cafe. You could have been anywhere. And I think that is part of this bigger shift we've been seeing that's been accelerated due to COVID-19 of people moving out to the regions, realizing that they can still have everything that they did, sort of the perks that they saw of an inner city life, or that lifestyle element is really what it comes back to. But in these regions, and based on this report, there's still plenty of jobs around. There's plenty of developments in the pipeline. There's plenty to be excited for, especially across those 10 most affordable areas that you did outline within that report. Bringing it back to what we're sort of seeing at the moment, I think we are in an interesting space right now. The federal election has just been called. We've seen both Morrison's Liberal Party, talking about extending their first home loan deposit scheme. We've seen, which is now called the New Home Guarantee. I will need to be picked up on that a lot in the future, but we've seen Albanese come back with Labor's plan to also go into the regions with their first home loan deposit scheme too. So we're seeing, we are seeing both major parties want to keep stimulating those regions. What are your thoughts on that and what it could mean for the future?
It's very interesting. I find that, a lot of people ask me, so what's going to happen to the market, because of federal budget for election, etc. This year is one of those years where the federal budget has been handed down, but then there is still uncertainty on whether or not that federal budget is going to hold and it's going to happen, basically, because we do have a federal election, right? Mm-hmm. And, that was the Morrison budget. And so if we do have an Albanese government on the 21st of May, which is, circled in big, massive red in my calendar, if we do have an Albanese government, then what does that mean for the federal budget 2022? Will it then change to an Albanese budget? What's going to happen there? But you're absolutely correct that the one thing when it comes to direct policy for housing, the one scheme that both Albanese and Morrison governments do have is the regional scheme. And because it's both in their budgets, it's both, planned, there's a higher chance of it sticking, so to speak. There's a higher chance of it definitely happening, being passed and, actually happening. And it does mean that there is more attention being given to regional areas. Now, the way that we've looked at this, and this is pure by coincidence because we released this report on the 7th of April, but the data mining was done way before that, not the 7th of April. It was done way earlier in March. So around the first week of March. And it just by chance that all of the areas that we've chosen, whether it's Queensland, New South Wales, Victoria, Tasmania, all of these 10 LGAs have a median house price of 550 and under. And for some people, that might sound like, oh my God, 550, how is that affordable? We are dealing with a different environment at the moment in terms of the average home loans. Those numbers are definitely very much more affordable compared to the capital city. Mm-hmm. So, 550 is literally a third of Sydney's median house price and about half of Melbourne's. And it's just by chance that when we did the report in early March, we saw a pattern of, oh my goodness, we can actually name 10 areas that would satisfy all of the rental, the project development, unemployment, everything else that is under 550. And it just so happens that the price caps for both Morrison and Albanese's government regional scheme is also around that. So I know that they would have had their own data people look at, what are the prices in regional government or regional areas, but it just goes to show that there is that sort of coincidence between the reports, in the sense that any areas that we do put forward here, if you were to combine it with the regional schemes, then the chances of it matching in terms of price caps and fitting in within that price caps is high. So, it is definitely going to push more demand out into the regional areas. And like we said earlier, regional areas have created, they're only regional because of their location geographically. But what you actually find in these places is it's not what you would expect regional is, I suppose. It's still very much so. Whenever I go to these areas, I feel comforted, to be honest, in knowing that I see the traditional architecture. I see the houses with the Tudor and Victorian sort of times. I'm a bit of a history buff. I love my English history, so I can see all of the different architecture. But you're also comforted with all of the restaurants, the cafes, the theaters, the exhibition centers, the entertainment centers, the sports centers, all of the infrastructure that is there as well. And some of these places have billions about to happen, like in Toowoomba, 1.4 billion. In Bendigo, more than $2 billion. In Wagga Wagga, same, more than $2 billion about to be invested in the area. So, it is definitely going to change.
And it all comes, I think, back again to that sustainability piece. And not only is there the infrastructure going into these locations, but there's going to be the demand from people well into the future who want to take advantage of, while the prices are lower, there's still government supports on offer, that they're trying to make it, as accessible as possible for people to be going into these locations. And hopefully we see that for years to come, I think.
Look, I would not be surprised. And the reason why I wouldn't be surprised is I feel like for years now, we've been kind of prepping the regional areas. Regional areas have been the focus of both federal and state government for the past 5 or so years now, in terms of developing infrastructure, creating those hospitals, the bridges, the roads, the highways, the transport nodes. It has been their focus. And in the past couple of years, even before COVID, we were already seeing a lot of big businesses moving out to regional areas in terms of their supply chain or warehouse, or creating a new branch in the regional areas. We're already seeing businesses follow suit. So, the triangle of society is government, business, and people, or community, right? So the government is already making their way, the commercial follows suit, and so you've got the last bit of the triangle, which is the community. And, that's kind of what's been establishing in the regional areas for the past 5 years. So I feel like as if they've been kind of prepping for us. The demand is definitely going to come to regional areas. We may see some issues in the near future when it comes to supply and demand of properties, particularly as we know at the moment there's a lot of construction challenges across Australia, not just in regional areas, but also in capital cities. And because there has been a lot of focus on the infrastructure and the commercial side of things, many a times the residential part of it has been left behind a little bit in terms of ready to sell stock. There's usually a lot of vacant lands or vacant lots available, which means anyone who is wanting to build has a bit of an upper hand. But then again, we all know about construction challenges at the moment. And so there will be that imbalance between supply and demand happening out in regional areas as we move further. And that's why now would definitely be the time to actually shift that focus onto regional investment.
Dear Swati, I know you've literally just mentioned some of those short-term obstacles that are existing. We all know about them at the moment. But from my perspective, it still does sound like a pretty big win-win for all parties. It's a win for the first home buyers who are looking for, maybe a little bit of a change of pace, a more affordable place to be living. It's a win for the investors who are supplying properties to people who are looking for that affordability as well, and the workforces that are continuing to grow in those areas. It's a win for the agents who are working there. There's going to be more transactions. There's going to be communities that are being built up around there too. And really, it's a win for the government, no matter who is elected, in that those places are going to be used and people are seeing value in that. Yeah.
It definitely is, because a lot of people talk about capital cities, and rightly so, right? We all kind of live in capital cities, but the regional areas are the backbone of Australia's economy. And so we all want to see regional areas thriving. We want to see them secure. We want to see them sustainably growing. And in terms of someone who is in the property industry, we are seeing more first home buyers opting for the rent vesting sort of a strategy because they feel they can't afford anything in the capital city. And so they've gone out to regional areas to buy an investment property and then rent where they currently are living. So we have definitely seen more of that. And, again, that's a great strategy, especially if it means that you can enter the property market, you've got a higher rental return and, all of that good stuff. And capital growth, of course, if you want to sell it, 5-10 years down the track. At the same time, it is also good for agents who are in regional areas with more transactions, like you say. It will support the local economy even more so. At the end of the day, it depends on what, and I always go back to this, it really depends on where you are at in your life cycle and whether you are flexible in terms of moving, embracing something new, and, embracing pretty much a new lifestyle. I'm going to be honest about it, Grace, like every single time I've seen properties in regional areas, I have literally done, when I see amazing properties and they're like half the price of Brisbane or half the price of Sydney, I share it on my social media, and my hashtag is always like, hashtag moving to Mackay, or like hashtag moving to Upper Hunter, hashtag moving to Port Stephens. Like, people are probably thinking I'm like moving everywhere. But, it's because the quality of the properties as well is becoming like so modern, and so the architecture in regional areas, you're spoiled for choice whether you want to go down the Tudor Victorian sort of like more, classical sort of route, or like the very more modern, rooftop pool, rooftop garden, sort of like newer buildings. It's all there. And so, you are definitely more spoiled for choice there. And it really depends on your life cycle as well. I've imagined, rooting and moving the child, the cat, the dog, everybody to like a regional area and what that might look like. And, I have, jokingly asking, can I be a chief economist still, but from like Wagga or Bendigo? Is
Why
that
not?
okay?
Yeah.
you know what I mean? It's kind of like, it really depends on your lifestyle and what is it that you want out of life and where you're at the moment. My daughter is still in prep, and so if I was to move her, it's probably an easier transition than, say, if my children are, about to set their year 11 and year 12, for example, so it really does depend on like where your life cycle is. But we are definitely seeing more people not just doing the, moving to regionals, but still working in the city and doing the home office thing, like the whole working from home flexibility, but actually fully moving to regional areas and embracing, either a career change or a tree or a sea change, or, doing something completely different. So yeah, the opportunities are endless.
Dear Swati, I feel like we could have talked for hours today. This has been a very condensed version of what could have been an amazing, illuminating 12-hour chat. We don't have time for that, unfortunately, but I really appreciate the time that you have given today. We'll hopefully get you back on the show super soon as well, because there's plenty more that we can be chatting through. Thank you so much for your time.
Thank you so much for having me.
It's been really, really fun.
Thank you.
We hope you like this episode, everyone who is listening, no matter where you are listening from. Please like or review us on whatever platform that you do use to listen in. If you have any questions for anyone here at the Smart Property Investment team, do not hesitate to send us an email, editor@smartpropertyinvestment.com.au. Stay up to date with us on our website, subscribe if you haven't already, and check out our social media, Facebook, Twitter, and LinkedIn. That is all we do have time for today. Until next episode, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.